All right, guys, let's go ahead and get started. Thanks for everybody that jumped on. I appreciate it. I see a lot of people I know, a few that I haven't talked to in a while. So it's nice to see these names and handles on here. Thanks for spending the time on a Friday. Wanted to do a couple things. So what to expect today. One, I just kind of wanted to give you my opinion of what's going on. Since I have everybody here, I thought it was pertinent and relevant to what our conversation is going to be after that, which is talking about this recent private equity investment offering that Cornell Capital brought out and partnered with Kyle Mallien, who you'll meet here in a second, and his partner, Michael Byers. So I think, first of all, most of you have heard this, but now it's increasingly important and it's been resonated from our client base. With markets being as volatile as they are, as you may have heard if you're on early enough, markets are up today. It's been a wild ride. It's going to be extremely volatile from every source I follow, including my previous firm. This is exactly what, quite honestly, Morgan Stanley projected that helped me make the decision to make the jump to Cornell Capital, to specifically find unique opportunities that are institutionally managed, heavily focused on cash flow, tax efficiency, and upside appreciation that actually move the needle, and more importantly, help you understand and know what you own and why you own it. It gives you some confidence because you understand it as well. So that's kind of the genesis for this call. We're here to talk today about one specific opportunity on the small business private equity investment space. We do have a sliver of that potentially still left. People were calling in today as we started this webinar. So I can't promise there's space available. If there is, you'll have an opportunity at the end to fill out a quick survey. So when you see it, it's not generic, it is from us. Just to gauge your interest, what you like, what you didn't like, if you want in on this one, and if you want in on the next round of opportunities, which is what we'll finish up with. So that being said, let me just paint the picture, high level of where we're at now, where I think we're heading, and why these types of investments make sense. Stock markets have been at all-time highs. You've seen the pullback happen. You see the volatility on the news each night. That is likely going to continue for the foreseeable future. More importantly, and I think where if I had to choose a space in publicly traded investments where people are going to get hurt worse, maybe not financially, but also probably mentally, is their fixed income, right? People inherently thought bonds are safe. They pay us income, which we know they really haven't paid income in quite a while. Their principal is preserved in one form or another. We're seeing the opposite of that, right? We're in a new environment than if you've been invested in the last 35 years, you've seen lowering interest rates. We're probably going to see a rising interest rate environment, which is what we've seen this year. And you have bond markets down 12 to 15%, depending on what you're looking at year to date. And by the way, they don't have the upside recovery like a stock does. So we're in a new environment. Most of us have not invested in a rising rate environment for quite a while, not to mention all of the other economic turmoil and situations with inflation, Ukraine, you name it, right? There's always something out there, but this could be a perfect storm that lasts longer than normal. But the point of why I switched and the reason why Cornell Capital is strictly focused first on alternative investments that create consistent income, appreciation, tax efficiency is because we don't have to necessarily worry about what's happening in publicly traded markets, if that makes sense. And for anybody on here, if we haven't talked about that and you want to, you guys all know where to find us. I'd love to have that conversation and how it applies to you guys. That being said, I want to introduce you to Kyle Mallien. He and his partner, Michael, are my partner on all of our small business investment opportunities. I wanted you to hear one from him directly, especially a lot of you on here are already invested in the project, and we appreciate that. What is his strategy? What's his background? Then we'll get into this investment specifically what we like, what are the potential risks, how are we going to mitigate those, what we expect to happen on a timeline. And then we'll finish it with just some upcoming opportunities. And like I said, finish it with letting you guys say, hey, this is great, this is not, I want in, let me know if you want on the list, so on and so forth. For the people that attend, we're going to put you, if you don't get in this one and you wanted to, top of the list of the waiting list for the next opportunity. So that being said, Kyle, do you want to just kind of give us high level, your background, where you came from, how you got here, what you're doing now?
Yeah, I am originally, thank you, Dana. Thank you for having me here today. And thank you for everybody for being on this presentation. Originally from a rural town in just north of Green Bay in Wisconsin, town of less than 10,000 people, was slated to be a third generation bricklayer. Quickly, I found out that was not a career path for me. Struggled through high school, was a terrible student, but ended up getting into community college and finding the mortgage finance business in 2001. 2001, found the call center and the mortgage business, and started building that company. Built it up to about 20 employees. At 21, went to all the way to 2007, 2008. 2008, we all know what happened. It lost everything at that time: the houses, the cars, the dignity, everything that went with that. If anybody that lived it was tied to the real estate business in 2008 and felt that pain, we've been through that. We started to reinvent ourselves and ended up buying a little trash recycling business in San Diego, California. And so we built that up into the electronics recycling space. I had LG, Panasonic, Google, Yahoo, Lockheed Martin, all these big corporate customers. Built that up to about 1,100 corporate customers in 36 months. And I ended up selling that company in 2014. I took that same exact business model, went to Houston, Texas, did the exact same thing, but for healthcare and oil and gas. Built that up and sold that in 18 months. After about 6-7 years being in the space, I took all my competitors and turned them into suppliers. And I said, if we're all going after all these electronics and focusing on all these Fortune 500 companies, how do I turn my competitors into suppliers? That company last year, after we took a core focus to telecom, became number 1465 on Inc. 5000's fastest growing companies in 2019, and we're still on that list. At that time, I kind of got bit by the bug. I had been burnt by real estate. I built this up, built this big call center and finance division, lost that, got into acquisition space and realized the stability of buying small businesses. And I really realized that businesses all fundamentally operate underneath the same parameters: sales, operations, and finance. So what we look for in businesses is any business that is deficient in sales, operations, and finance that we can add value to, that is good existing cash flow, and we can add value to. We're in a crazy environment right now. We're looking at the interest rates where they're at, like Dana was talking about, the bond markets, the stock markets, the real estate, everybody, the deal availability in the real estate, in the single family and the multifamily is getting harder and harder. The cap rates are getting lower. We are still in the real estate business. We have 165 single family doors in South Carolina currently. We have a property management company. We have a plumbing company. We have 16 companies totaling 140 million in revenues. And so we know the difference between the real estate market, the single family side, the multifamily side, and the business side. But the business has so much greater opportunities for returns. In the real estate business, your results are really truncated. You can only buy for a little bit of value add, and you can only cut cost or raise rent so high before you start to price yourself out of the market. In the business world, I can find one new strategy, one new distributor, one new marketing campaign, one new business that I can buy as a target, as part of my supply chain, to increase the bundle value of that type of a company. And so with a small business and the parameters in the buy box that we stay focused on, we're not truncated with truncated results. So we typically focus on businesses 1 to 5 million, 20 to 30% profit margins, stable businesses that have assets, have employees, have been around for 10 years, have a track record. And what's really crazy is right now, the baby boomers, there's 10,000 baby boomers retiring every single day in this country. 40% of the jobs in America are funded by baby boomer businesses. And unfortunately, there's just not a lot of talk or education around the small entrepreneur trying to get into those businesses. And there's not really a succession plan for these business owners. So along the way of building this real estate portfolio, building these companies, building these things, we identified key opportunities to be able to train and educate folks on how to identify these opportunities, how to find these businesses, how to mitigate risk, how to operate in an environment, especially like the environment that we're coming into right now, while mitigating risk and fixing our cash flow. With that investment thesis, it's a very safe alternative asset, comparatively speaking, to the other things that we're looking at. So that's my background, and that's where we got started.
No, that's perfect. I appreciate that, man. And it brings up a couple of points. So, and for those on the call, first of all, you guys know, or most know, I was at Morgan Stanley. Most don't know, Morgan Stanley's one kind of cornerstone of my business there was private equity funds. They had a proprietary fund that they named, so it wasn't necessarily looked like proprietary, but it was their most successful single investment over the last 20 years. That's why I started my due diligence on people like Kyle and his partner, Michael, which I've done for about 1.5 years now. I dove into their training course, took it as an individual, really learned the nuts and bolts of how they do this, what they look for. And that's how I built my confidence to then, invest with them and bring them to my investor network. I say that because the point of it is, as big as Morgan Stanley was, their unique advantage was they would come to people like myself as a wealth manager who had those clients, the baby boomer that had a really good business, huge cash flow, done it for a long time, really wasn't open to expanding or growing, and they were comfortable. They would incentivize us to refer those people to this private equity fund. And I always thought that was interesting. So that's what I set out to recreate. Because if you really think about it, and this is how kind of our firm is built, and I know Kyle agrees with this. If you look back, the true wealth in this country has been made on owning real estate and small business. So why wouldn't that be a cornerstone of everybody's investment portfolio? And you touched on risk, right? I would argue, given market environments or certain situations, some people think private equity is more risky, and it can be because there's more moving parts. But it's also more controllable because you can have your hands on the wheel, so to speak, and you're not subject to the ups and downs of emotional trading, everything that you're seeing right now in publicly traded investments. So it kind of redefines my thought process on what is risk and how do you handle it. So that being said, that's a good point, and I think it's important for everyone to hear that. In your mind, what are the risks of this type of operation? Maybe talk big picture, and then we'll get into the specific opportunity after that, but just big picture, because we're going to have multiple of these.
Yeah, lots of
the risks, and how do you fix it?
Yeah, risk and risk mitigation is our core fundamentals. That's why our investment thesis is the way it is. That's why the buy box is what it is. We're not looking for jobs. We're not looking for things that are regulatory, healthcare and, controlled by Medicare and things that are out of our control. We're not looking for things that are going like planned obsolescence. That is a good lucrative investment today, but it's going to be gone in 5 years. We're not looking for early venture stuff where it's too early and we have to create a market around this new ideology of like this next best thing since sliced bread. The stuff that I'm looking for is boring and profitable, because profitable is boring. The reality of the fact is that, a ball bearings manufacturer in Cleveland, Ohio, that's been around for 20 years, that does $3 million in revenue and 30% GSA government contracts, is not a really sexy business, right? They may make $1 million in cash flow every year consistently for the last 10, 15, 20 years, but the next in kin or the next to take over the business is not interested in it. We live in an environment now where it's cooler to be popular on Instagram with a blue check behind your name than a couple $1 million in cash flow a year for this next generation that's coming up. And so there is no succession plan for the business owner. There's a lot of businesses coming on the market just like his. The private equity, the institutional funds do not chase stuff that's under that goes below $2 million in net profits. And so it's the deals that we're looking at based on the investment thesis, it's too big for the small guy and it's too small for the big guy. And that's where really, really good operators can come in, find stable, predictable things, add revenue, add sales, add direct marketing, add CFO services, add all of these things, take what's already existing and just make it better. And when we start with something like 20 to 30% cash flow, the margin's already built in. And if those numbers are there historically and have been for the last 10 years, why would we think that just because the CEO is out and sales operations and finance is still participating, why would that be any different? So I think it's really important to focus on the team to mitigate the risk. I think we are industry agnostic, avatar specific. So I'm looking for business owners that are on the back end of their career that do have these great ball bearings manufacturing companies in Cleveland, Ohio that nobody cares about. That's really the fundamentals of our thesis. Today, we're here to talk about a postal mailbox company where the guy had set up in California 25 years ago, worked for a franchise, moved to Nevada, has been running this one for over 20 years. It's very predictable. I mean, the business is mailboxes. In a good economy, a bad economy, recession, no recession, it doesn't matter. People aren't going to default on a $20 mailbox. And so I look for things that are profitable and boring and profitable, but I know that I have a strategic edge. I know it's part of our supply chain, whether it's something else that we do or a skill that we've acquired. My partner has got a software with over 10,000 endpoints that they manage in the field. And so there's a lot of automation and techniques and disciplines that we use internally as a team and to be able to run and operate these businesses. So we want to find stuff that's big enough that it mitigates the risk, that is not 100% reliant on the CEO, that has a consistent track record, and that really nobody cares about because the buyers just aren't there.
Makes sense. One thing, just to jump back on risk, my former life, again, in private equity, most of it is speculative, right? Yep. That's the perception of private equity and why it's the riskiest, so to speak, investment asset class, which it's not all things for all people, even at this level. But to have a cash flowing business, and in my simple mind, if we're paying 10% income paid out monthly, one, where are you going to find that? Most of my clients used to say, man, if I could just get a consistent 6 or 7%, I'd be good. It's very hard to screw up these businesses. Not that you can't, right? There's certainly no guarantees, but if they've done it for 10 or 20 years, hopefully it gives investors and myself a level of confidence that we can at least sustain the business. And hopefully we grow it a little bit, right? And there's your upside appreciation. So when I think of that, that to me also is a risk differentiator. The other thing that you just mentioned that I'd like you to touch on, and I get this question a lot. Great. So the owner's retiring, right? He ran the ship. Who's going in as an operator? And then what's the connection to you guys as the parent, so to speak, company? How does that work? How often are you in contact?
Yep. That's a great question. Along my journey of building these companies and just having a good track record, I've had 3 exits myself. Going through this process, people come to me and say, can you consult for our company? Can you help me get the most amount of money for my company? Can I invest with you? Can I invest like you? Teach me what you're doing. And so 18 months ago, we started to put together a program where I actually teach operators how to buy 6, 7, and 8-figure companies. I have about 75 different disciplines and strategies that we play, how to find it, the off-market side of things, how to identify it, how to identify risk, how to do the due diligence, how to really get on the ground. Once you look at 50 deals a week, 52 weeks a year for a decade, you start to connect the dots, right? We don't know what we don't know, but as we go through the process and as we look at so many deals, we cover all these great opportunities. And so with that, I've actually trained over 200 people with my investment thesis over the last 18 months with Acquisitionpreneur and what we're doing with our coaching and training. And so it's actually building a group of super competent operators that have great backgrounds that are looking for those opportunities to grow and go and run these businesses, to have proximity to us and our group. And we found that is it's kind of like a bullpen for the up and coming. They've been trained with my investment thesis. Like, for example, the guy that's coming to run this one has a finance background. He went to Mississippi State College. He was running fuel reports and planning for over 700 semis for his last corporate job. So he's very he's sophisticated with his background enough to be able to run a simple 5-person postal shop that has some upside to it with the software element. So we're actually grooming these operators through our coaching stuff.
And then you oversee them on how often does that happen? What's the reporting like? How does it filter up to you to make sure everything's on track? Because you're still the mastermind behind the scenes, right?
Yeah. So we have 16 companies. We're doing daily huddles. There's obviously levels to this. We're doing daily huddles with our people. We're doing financial reports. We're going over KPIs on a weekly basis. There's teams and people on the ground in a lot of these situations. In that direct operator will report to me direct.
Which is unique. Talk a little bit about, since we're on that topic, how often do you put out financials? And given this is a new relationship with our investors, what can they expect? A quarterly update?
Yeah, quarterlies would be perfect. Understand that we're looking at them. Like, I'm a KPIs guy. I need to know, what did we sell? What did we buy? What's what exact KPIs move each business? And we do those reports on a weekly basis. I typically use Rockefeller Habits and the Gazelles software. So we do a lot of planning, a lot of structure stuff so that we can meet our numbers. That's how I ended up getting on Inc. 5000's fastest growing companies list. And I stick to those methods with everything that we do. I think what investors can expect is at a minimum a quarterly update and a guidance as to where we're going with it, because there's a lot of things that are happening. In this particular deal, I've identified 12 growth strategies, right? So there's a lot of moving parts here. The first 60, 90 days, I want my operator to get on the ground and just become a chameleon. Really, this is your brand new job. Get intimate with this, get intimate with the seller, understand all of the things. And this is something that I used to do. Michael and I used to go on the ground and actually operate the business for the first two to 4 weeks in the beginning, just because once you understand all the things that can be broken, you know how to fix them and you know how to relate to the person that's in that spot. So there's transparency is key. KPIs are key, and we're definitely focused on that.
One more question comes to mind, right? So this is kind of a recurring theme that's come up, and a lot of our investors are real estate savvy, real estate investors themselves or operators. The way I look at this is almost like you could call it a multi-family apartment complex value add on steroids. Yeah. Which we all know, right? Your cost of entering the project makes a huge difference. Right. Can you talk a little bit about how you guys are sourcing so many off-market deals, and what's the typical, if there is an answer to that, the typical discount to retail price?
We are first off, we have a database of 128,000 brokers in the country, business brokers. And so, first off, our deal desk, we call it the deal desk. We have 12 analysts that are shopping both on market and off market deals. Of course, we're meeting with some of the best brokers. I met with the #1 best broker in the country just yesterday for lunch here in Las Vegas. So nobody sold more deals than this guy here in Nevada. And so we're connected with really good people and resources, and they know a good deal versus, what may have some hair on it or have some risk. And so #1, plugged into the community. #2, we're doing about an 8 or 9 multi-prong approach between email. I could tee up literally any category if I wanted to go after HVAC. I have a lot of private equity companies, a lot of hedge funds, a lot of people coming to me saying, hey, I'm looking for pest control. I'm looking for HVAC. I'm looking for urgent care facilities. And we have this proprietary deal desk where we're sourcing all of this stuff, both on market and off, through brokers and through this multi-pronged approach. And what's great about that is, 90% of the businesses that get listed on the retail markets, like the biz buy sells of the world, never sell, because they're working with essentially a real estate agent that's saying, yeah, I think I could sell your business. Yeah, you're under duress. Well, why would somebody sell their business, right? Health, death, divorce, boredom, entrepreneurship, like a number of different reasons. But sometimes when they want to sell now. And that's where we become a succession plan for a lot of these business owners to say, okay, well, what is it that you want? Here's what your business needs to look like in order to achieve that. And here's how you're going to have to make that happen. And most business owners just don't get that kind of guidance. They go to a broker under duress, please list this. And then they go through this tumultuous process. And 90% of the time, they never sell the business. So when I can get direct to the seller, because I'm not looking for risk. I'm not looking for, I want to get direct to the seller, become a succession plan for the guy that has the ball bearings manufacturing company that wants to go to Florida to ride out the next 10 years of his life, but doesn't want to give up on that 20 employees and the government contracts and the $3 million business. And, you know, the gal at the front desk that's been with him for 10 years and the little league team in the community that he supports with his logo on their jersey. There's a lot of elements as to why somebody want to sell a business. But the price is not always the most important factor. It's legacy, it's long-term value, it's all these other things. So we found that if we can get direct with them and create this belly-to-belly conversation of, hey, this is a human-to-human experience. I get it. You want to retire, you want to get out from underneath this business. If you stop on this treadmill, you can't necessarily get off. That's where we can come in and create the succession plan for this business owner, albeit at a discount, typically.
Yeah. Makes so much sense. So you're leading me down a little bit of a rabbit hole here. Why don't you explain, and I love when you say we're buying on Main Street and selling on Wall Street.
Yeah.
Right?
Yeah.
What's the difference when you or when we go to take this business or anyone you do to sale? What's the difference of when you're buying it that you just explained to actually the sell process?
Yeah. So the whole business is set up on this. $1 to $5 million, 20 to 30% profit margin. I can reinvest into that and I can get it above 10 million bucks. If I can get it above 10 million bucks, I'm typically going to hold a 20% profit margin at a minimum. Now this becomes an interesting thing for Wall Street. And so we have a list of over 39,000 private equity, family offices, institutional funds, ultra high net worth individuals, the biggest of the big, 39,000 professional people that are buying deals for a living. And so what's so crazy, and the biggest mindset limitation I see with my students that are coming through that are being trained to buy businesses is they're like, well, first off, how am I gonna come up with that kind of money, and then who's gonna buy it at the end of the day? We start with the end in mind. If I'm going to go buy something, I'm already going to have somebody identified, and I'm not going to put a price on it. I'm going to put an auction on it because it trades as a function of what the free cash flow is. So when I can take this non-professional mom and pop business, I can audit the financials, I can clean it up, I can put a professional CIM together, I can add sales, operations, and finance and silo those three things and have a clear organizational chart and SOPs and who's doing what within the business. That's what the business owner is buying. That's what the other person on the other side is buying. They're buying a process, right? And so the more clarity I can add to that and show, the better of a premium I'm going to get. So it becomes a situation where we're buying for 1 to 3x of the free cash flow. And when we take it back to market, we're getting an obscene multiple depending on the category, depending on the buyer, depending on the circumstance. And so anything under $2 million in free cash flow, Wall Street doesn't care about. Private equity doesn't care about. There's just not enough meat on the bone there for them to even consider it unless it's part of their current business model and they're just tucking it in to increase efficiencies. So this is specifically what we're looking for, but we're working with the seller direct that doesn't know that. I'll give you a great example. And just real quick, Dana, it's kind of off subject, but I have private equity companies that are looking for HVAC companies. They focus on just I have two actually. One focuses on just residential deals and one focuses on commercial. One pays 8 times earnings, one pays 12 times earnings. If you go on to Biz Buy Sell right now, you will see every company that's under $5 million with $1 million in cash flow, is somewhere between, 1, 2, and 4x right now. So just by arbitraging the multiple, cleaning it up, what I find like those types of services businesses, they're really good at their service or their operations. They're not very good at the business or the aesthetics of the business, the KPIs, and mapping all of that stuff out to get to where they want to go to grow a big company. And that's what the other side is looking for. So we take this non-professional mom and pop ran business. We aesthetically make it more pleasing. We increase the sales and the marketing and the revenue opportunities. We find other things that we can buy in the supply chain to bolster the enterprise value. And then we take it back out in a reverse bid process to 39,000 professional buyers.
Strong. So you come in, let's say and in the case of the Mailbox company, which we'll get into a specific and make this real for people next, but let's say you double the revenue and then you get a higher multiple. It's leverage on leverage.
Correct.
Where else can you get that?
Right.
Awesome.
Yeah. And the higher you go with that, the greater the multiple gets, because the bigger the deal, the less the risk.
Yep.
Right.
So why don't I appreciate that. I think it's a pretty good high level, who you are, what you do, why we do it. Why don't we jump into that while I'm sharing my screen? You want to just give them the high level rundown of what this deal is, why you liked it.
Yep.
Point me around on the marketing. And by the way, anybody that doesn't have the marketing deck and wants it, just shoot us a comment or an email after. And mine is just Dana at Cornell Capital Holdings with an S.com. And we'll make sure you get it so you have a copy for yourself. Go ahead, man. Go through that and direct.
Can you share the screen? There's a couple fundamentals that I loved about this business right away. If you live in a no state tax state, you know that a lot of people come from the bordering states to be able to get corporations here to not have state tax, right? And so in Nevada, a lot of people set up in Nevada just purely based on the privacy. And so we love this just for that, right? The fact that people are paying for PO boxes in Nevada, and he's got a lot of them. First and foremost, he has 750 or so on the ground physical PO boxes. But what makes this really cool is you can get an office here and set up your virtual PO box, and then what happens is all the mail, rather than getting it forwarded, they open it up, they scan it in, they send you an email. That's the premise of the business. Very easy. 750 physical PO boxes on the ground and 2,800 total PO boxes in total. What I liked about this right away was typically when you see something like that, it's a USPS, it's a postal, and it's a franchise type store. This is an independent store first and foremost. What I didn't realize was that majority of these, the 2,000 plus, are all virtual. My partner has a software background, as I had mentioned, 10,000 endpoints. This is right in his wheelhouse. So we started to look at it and see where is the opportunity to leverage up on that. Based on how they have, this business structured, or how the broker was selling it, they were selling it as a pack and ship business, which would normally sell for, 3 to 4 times earnings. But what this really has is a far majority of the revenue is coming from the software, right? The virtual PO box. Right. And so you have a software companies trade for a completely different multiple, and it's usually a multiple of the gross revenue, not the net profits, right? Or the EBITDA. And so a couple of things right away I liked about it. It was misrepresented in the open market. It was a small footprint, low overhead costs, revenues of 640, seller discretionary earnings of 321. The gentleman had come from California, moved to Nevada, been here 20 years and been running it. Historically, the numbers all check out. And so I love that. It's a simple and easy business. It's not super complex, not a lot to think about there. Now, where is the value at? What I realized is that he's pricing these boxes at $10 and at $10 a month. And I thought, well, I have a PO box. I don't even know what I pay for that, but what does PO box cost? I mean, that's $10 kind of seems low. So we started to check the market comps, went to USPS and understood that the actual price for that is 20. And so that's double where we're at right now. So I thought, man, right away, we have a modest, there's only a couple ways to grow a company, right? It's either raise your prices, find new customers, or sell your current customers more products. 3 ways to grow a company, choose your poison. Now, we have the ability to do all of that, right? This isn't a super sexy business, but it's super fundamental. If we go from $10 and there's 2,700, but there's 2,800 mailboxes. If we go from $10 to $20 overnight, right? And there's a number of ways to do that. I actually baked into the cake that, USPS pricing was $12 and we raised prices from 10 to 15. after we checked out all the local comps on the ground of what everybody else is offering, the fair market rate is $20 with a year contract. So just taking $2,800 as a loan and increasing the prices to the fair market rates, you're talking about $28,000 a month if you had 100% rollover. 30 times 12, 360 in value add just from that one method. And literally, I do nothing different fundamentally in the business. All I'm doing is raising prices and sending out an email to these folks and letting them know what the new price change is going to be. Are you going to lose customers? I don't know. It's a fair market deal.
Hey, Kyle, before we go on, just to make sure everybody's clear on this, can you just give a brief, go a little bit deeper on what is a virtual mailbox? Who uses it?
Oh, okay. Yeah. So again, if you need to open up a corporation in Nevada, you need to get a bank account to do that. You can't get a PO box. You have to get an actual street address. So this store is actually a street address for all of these actual PO boxes. And so it's a pack and ship store where they sell other, things and do packaging. You can ship boxes and stuff like that. But 90% of the revenue is coming from the mailboxes and that type of activity. But you would get a virtual office for a number of reasons. Maybe you're in California, you want to say that you have a business location here in Nevada. You can show strength by opening up multiple offices. Again, the tax arbitrage of having a corporation in Nevada, the privacy of having a corporation in Nevada. All of these are reasons you would potentially want a corporation in Nevada. What happens though is, how are you going to get that mail? Right. So they go pick up the mail every single day. They open up the mail, they scan it in, then they send you an email. Normally that's if you wanted a virtual office with one of these like Regis office satellite offices, it could be anywhere from $40 to $150 a month for that corporate image to actually have an office in Nevada. So this is a very primitive thing, on this side for the virtual boxes. Does that make sense?
Thanks for that. Yeah, I appreciate it.
Yeah.
And just so everybody knows, right, Nevada is a favorable state if you're going to open a business.
Yeah.
It's not just people in Nevada.
Right.
There's a reason people across the country do it. You want to, while we're on that topic, and if we want to circle back to just one or two of the higher end strategies to add value. Sorry, it's been a long day here. Talk about what I would call the LegalZoom competitor. How many they said they do a month, that type of thing.
Yeah. So we've done a lot of business with this one particular customer. I think we've sent them probably 400 or 500 referrals over the years, and we've become pretty good friends. They built up their original business and sold it to TurboTax, I believe, or Intuit, and they started another one after the 5-year mark was up, and now they're doing some great business. They're doing a lot of things there. And so I had reached out to them and I said, I know that you guys have offices in Washington and Tennessee and Delaware and Wyoming and, Nevada, all the places where it's favorable to have because there's no state taxes. And so she said, yep, we're setting up corporations every single day, in all those places. And I said, are you guys doing any mail forwarding? When you open up a corporation with like a LegalZoom, to open up in the state of Nevada, you need what's called a resident agent. A resident agent is somebody that is like the signer for your corporation paperwork if you're ever to get paperwork. And so they typically charge $150 for that fee. Well, this group is like a LegalZoom, so they set up these corporations and then provide that resident agent fee or service and collect people's mail. But what they don't do is they don't do the mail forwarding and they don't scan it in and send it off to their clients. And I said, do you ever get this mail scanning and mail forwarding request? And she was like, literally tens a day coming out of Nevada. I said, well, look, I'm buying this company over here. We have a longstanding relationship. If in the event that we ended up closing on this deal, is this something that, we could potentially partner up with? And she said, absolutely. We'd love to send you a bunch of referrals. So I think that's a unique strategic advantage. Again, one of those who do you know type of a situation, who can add value to what we're already doing and who complements us in the supply chain.
Perfect. Thanks for that. So why don't we jump ahead a little bit? It sounds like there's, as you see, and if again, reviewing this for those that haven't seen it, there's 12 strategies Kyle and his team have laid out. 2 of them essentially can one of them can double the revenue.
Mm.
2 to 3 can make a huge impact. So we can move the needle pretty quickly, in my opinion, just by some low hanging fruit there, price increases, so on and so forth, referral strategies. Talk about what's the exit strategy? What's the timeline? Is it a hard 36 months? Could it be sooner? Could it be later?
Yeah, I think,
Where do you see that
really,
for this business particularly.
yeah, this is a really exciting opportunity. Because you don't know what you don't know, right? Like I had predicted, I'm always super conservative. So I predicted, hey, if we had a 50% price increase, is that too much? I don't know. Then I'm on the ground for the week and I'm, and going around and talking to the different suppliers and understand that, like, look, $22 is the fair market price. Is anybody, regardless of their situation, going to balk at a price increase? When Netflix went from $9.99 to $19.99, did anybody cancel their membership? No, it's just one of those things that, like, you needed. If you have a corporation here and that's already set up, you just don't want to rock the apple cart and change anything, right? So the automatic price increase is number one thing. We're already looking at the website image enhancement. We're already looking at this. The owner has never ran any ads, never done any marketing. He ranks really well SEO wise. So when you Google these, in Nevada, he's actually top 5 on Google because he's been around for so long. And so when you actually search keyword virtual office Nevada, or Las Vegas, so he ranks really high. And we look at all the different things that we can add to it. It's going to get really interesting really quick. The one thing that I will say though is it's probably going to be earlier than anticipated. And I say that with a few caveats, because if we raise a price and it goes from 325 in free cash flow to, let's call it 650 in cash flow, just for easy numbers. It goes to 650 in cash flow. Can we separate out the software element of the business, okay, and keep the pack and ship brick and mortar at that same, right?
This is another question we get a lot, so I'm glad you're touching on that to explain.
Yeah. I mean, if a traditional business sells for 2 to 3 times earnings and it's got less than $150,000 in income, what can you sell that opportunity for? But can you spin that one thing off and then keep the one portal and go nationwide with it potentially? One of the things that we'll do when we get into a situation like this is we'll identify. This is a sleeper. Nobody thinks about this. Nobody talks about these types of deals. Wall Street doesn't care about stuff like this. Even small entrepreneurs don't really care about something like this. But I'd start to look at all of the other off-market opportunities and start to look at the on-market ones as well. I just had a conversation with one in Reno yesterday. It's close. The metrics or the free cash flow isn't as good, but it's on that Cal-Neva border, right in the Nevada, California state border there where Reno is at. Little mountain town. It's $400,000 or $500,000 in revenue. It's $150,000 in free cash flow. So that just leads me to believe that there's going to be a bunch of these out here that look like this. I think this is a great platform for us to get in and us to pick off other. Because all we're doing is buying cash flow at that point as we're acquiring more PO boxes. And so think of it as doors, right? How many doors can I accumulate? Yep. And is there enough free cash flow there to service the debt in the meantime? So there's plenty of different options here. 36 months, that's not a hard stop. I think the question becomes, if you spin off the brick and mortar and you focus on the software, how big does it get? Because again, software companies sell for a minimum of 6x gross revenues. Right. So the numbers could get really good, but I'm ultra conservative at the same time. So
Kyle, a few more questions on this, and then we'll finish by kind of running through the return projections.
Yeah.
But 2 things. You mentioned another store in Reno and looking at other potential roll-up strategy. How much competition is out there competing with this business in particular relative to the demand, and does it really matter given the amount of demand?
Again, we're looking for the non-franchised stuff. So I'm not looking for UPS. I'm not looking for Postal Annex. I'm not looking for brown box shipping department businesses. I'm not looking for that. I'm looking for PO box, and I'm looking for virtual servers that we can expand that way. And so what I can tell you is that I haven't seen a lot of competition or demand. I get a lot of buyer demands from a lot of different private equity companies and a bunch of different shops that are looking for certain things. And I've never seen something like this. This was an inside track deal from a broker that we had here in Vegas. And I said, this thing just makes sense. And I think that there was a disconnect in how they were presenting.
Makes sense. Appreciate that. So guys, I pulled up on the screen here. I'll just run through this from my view pretty quickly. Kyle, feel free to add anything in there.
Sure.
But the way we like to do this is really show a base case, an average case, and then a kind of a best case scenario. Still being conservative in our numbers, so we can relatively predict and make sure we deliver on what we're showing here. So at the very bottom, we're just outlining different potential sale prices minus our cost basis, purchase price in, and showing the profit. One thing I get a lot is, and Kyle, I'll address this on my side and you can add whatever you want. Why is it a 30% split to investors, 70% to the operators? One, a couple of things that people are sometimes not seeing, or it's a little bit different than like comparing to a real estate deal, right? So the beauty is we're not charging any management fees along the way. So if you added those back in, that gets closer to a 60-40 split anyways. Private equity, at least in my history, my experience, the split to the limited partner in is traditionally usually much lower than 30% when you get playing with the big boys. So there's much higher fees. They're taking a much bigger piece on the backside, and the split to given to you is a little bit less if you actually do an apples to apples comparison on the cost in. And I also remind everyone, for the amount of work going in this, it's what you take home at the end of the day, right? Because you're personally guaranteeing things on this deal. You're flying across the country. It's a different level of, in my opinion, specialized knowledge. Not that owning and operating real estate as a comparison is not tough, right, or specialized, but there's a lot of people that do that. There's not a lot of people that do this at your level, which is why we partnered with you guys. So that's kind of how I look at that. I look at the end result of what was in my pocket.
Right.
But you feel free, any thoughts, comments on that side of that?
Yeah, when somebody says to me absentee or semi-absentee, I just kind of chuckle in my head. If everybody here is invested in real estate projects or multifamily, you're as good as your operator and as good as your property management company in a lot of cases. With toilets, tenants, termites, taxes, or rising costs, all of these things play into it. With the businesses, you really need somebody that's competent, that's on the ground, that can really run the business and the result, and have number one, have a track record. Number two, have an exit plan. Number three, really guarantee these types of returns in a semi-absentee, an absentee situation, right? And so I always look at what's the risk reward for participation in that type of a deal. So,
and I'd probably add your ability to source a lower price.
Yeah.
Right. So they wanted 1.5 essentially for this. You negotiate to 1.2 because of your off-market potential. So, factor all that in. To me, that makes sense, and there's high value there across the board. So that being said, any last thoughts on this opportunity? Again, guys, I think we have a sliver left. It's first come, first serve. You'll be able to jump in if you want via the survey at the end, or you can reach out to us directly, whether it's myself, Ryan, anybody on our team that you've talked to. Aside from that, any parting thoughts on the Mailbox company? And then would love to hear and let the investors know what you guys are working on, what we might come out with next, if you have an idea.
Yeah. Look, this is 10,000 baby boomers retire every single day in this country. This is my number one staple when I'm talking to anybody. So whether it's this one or it's the next one, this strategy is going to be here for a long time. This, like Dana said, since the beginning of time, all the rules have been made for the real estate owners and the business owners, and all the money is made in small businesses and turned around and put back into real estate for capital preservation, right? But the cash flow and the money being made is being made in businesses. Appreciation that's a completely different ball game. I'm creating my own appreciation in these types of situations. And sometimes, where on the planet can you go and want to buy Apple stock and find one broker at this price and another one at a discount over here for 30% discount? Nowhere. And so in this business world, it's so fragmented. And we're really bridging the gap between Wall Street and operator, that we're coming up with this unbelievable opportunity in a lot of regards. Number one, finding the off-market deals. Number two, having the competency and the understanding to find like who thinks of these types of opportunities, and then be able to add value and reprice them and arbitrage the multiple and take back to Wall Street. Like, it's super creative, and every deal is going to be a little bit different, but it's just unprecedented demand on one side, unprecedented supply on the other side, and no matchmaker in the middle. One thing that we're discussing, we do live events every 90 days. We train investors how to buy, and we serve a lot of real estate investors. Teach people how to buy these companies, and cross collateralize them, find the risk, do all these other things. But we're going to do an investor appreciation day, and we're going to showcase 30 off-market deals that are actually coming from our deal desk, that have been through our analysts, that are identified, that have trailing financials that we've gone through. We've put together a whole prospectus on this. And so that might be an opportunity. Actually, shortly coming up, we're having our live event in Nashville, the first weekend in Nashville of August. And so that Sunday, we'll send out more details for everybody and showcase some of the deals that we'll be talking about. But this strategy and opportunity is here to stay. I'm very excited about the postal side of things, because this business isn't going anywhere. Again, good economy, bad economy, regardless of what's happening with interest rates or the stock market, I don't really care. People are going to continue to pay their PO box, and this service is going to be widely in demand. And so the unique fact that it is predominantly software adds a ton of scale and a ton of exit ability. So very excited about this one. We have a lot of stuff in the pipeline. We're negotiating 20, 30 deals right now with students. In the last 12 months, out of 200 students, my students have done $35 million worth of deals that they've bought for themselves, creating $6-7 million in free cash flow for them and their families. And so, we're not just, it's not just my business, this is my life. We teach this. I get excitement from showing other people how to do this, and the pure disconnect between Main Street baby boomers retiring and Wall Street that is just chasing 5, 6, 7 caps in the multifamily space, and bridging those two things together. So thanks everybody for joining us. I hope if we have some room available on this one that you'll participate. If not, there'll be a lot more of these opportunities coming up.
Kyle, real quick before we wrap up, and I'm glad you brought up the event in August. So just so everybody knows, all of Cornell Capital's investor network is going to have the option to participate in that. We're probably going to bring in some pretty good speakers. Kyle always does on his side. I'm planning to bring some people to give you kind of the lay of the land of the market outlook, how to choose your allocation, whether it's these businesses, real estate, whatever it is, right? So a lot of value add there. Also to be in a room with a bunch of like-minded people that kind of fit your profile, right? All the same people tend to resonate with this type of thing.
Yep.
I guess I'll just summarize by saying, given where markets are at, given that most of the major firms are predicting at best a 5% annualized rate of return in the S&P for the next 5 to 10 years, and negative bond returns, to be able to offer 10% consistent income paid monthly, and a potential for the upside that you guys saw in low 20s to high 40s, if that was best case, right? But let's just stick with low 20s, even say we hit half that mark, you're going to potentially 3x your returns as opposed to a traditional investment strategy. That's why I feel strongly about these being cornerstones of a portfolio. Not all things for all people. Not all people are right for these investments. So if you're interested, please fill out that survey at the end. I appreciate you guys hanging in here. Hopefully it was informative. You know where to find us. Any other follow-up questions, we'll react as fast as we can to get back to you. Other than that, Kyle, one last thing. If they do want to figure out more about you guys and your program, anybody is interested in that, where they find that.
Yeah, acquisitionpreneur.com. The word acquisitionpreneur.com. You can find all about what it is that we do, who we serve, who we educate, and the people that are coming through the program. Love to have like-minded folks in the room. Every event that we've had, the last 4 we've had, every single event we've had a billionaire that's been unique and strategic in different things. And so one time we have a customer and a client that, you know, did 6,000 franchises in the fitness space. He was recently at the last one. We had Neil Patel at the one before that. We had another guy with, he's got $100 million fund as well. So there's a bunch of great like-minded folks that are coming. A lot of real estate, a lot of single family, a lot of multifamily, a lot of syndicators, a lot of great folks coming to the event. So stay tuned for that. But Acquisitionpreneur, I can actually put it in the chat if you like.
That'd be great. Yeah. In the meantime, appreciate everybody, especially those that are in this, those that have supported Cornell Capital from the beginning. Again, hope this was informative. Please reach out with any questions. Happy to help you work through anything, whether it's this specifically or just big picture on your investment strategies. Thanks for hanging in. Hope to talk to everybody soon. Thanks.
Guys.